Okay, Portfolio Builder members, today is January 8th, 2020. Welcome to our live presentation. We did hit our max profit today, but it did require a little patience. We had to wait for the Trump announcement to come out where it was highly anticipated that he would show patience and leadership and not escalate the trade war. Also, think of it from a more cynical point of view, he wants to win the election. So he's probably going to put up with a lot of crap in the next 10 months. And so this is why we've had an outlook to be bullish equities and bearish bonds. And today, those calls are turning out very well for us. I'm going to start out by reviewing the results of our previous trade, look at our open positions, give an outlook for the future. My little pre-recorded clip this morning was not created, so I will pull up my iPad and go through some charts live. I knew whatever the news would be today, whether it was good or bad in terms of war with Iran, that it would dramatically change the prices of the markets. So that's why we did delay today's trade, allowed us to capture the larger return, lock in those profits, and not end up with puts and calls that are working against us simply by not having waited 10 minutes. So I do apologize for the delay. Let's just review how to audit the returns. Okay, so when we issued this trade last Monday, the SPY was trading at 322.30. And today, as of closing it out, we were at 325.01. We were short the 325 call, which means we sold the 325 call option, and we were long the 320 put. So we wrote a call option to collect a credit, and we purchased a put option for a debit. The initial cost of that overall option caller was a debit of 29 cents to our account. And to close that position, we had to pay yet another $1.01 to exit this position. The net profit, after you calculate the appreciation in the underlying, which was the SPY, and then reduce it by the cost of our protection, that makes this trade safe, makes it worthwhile to pick up $1 or so per share without having to risk multiple dollars if something goes haywire. And again, that's the value of the option caller. It always looks like it's a drag on our profit until it saves the day. And in fact, I can pull up our spreadsheet a little bit and show you those rare instances where the puts kick in and we have 1,000% plus returns. And all of a sudden you can understand why it doesn't make sense to pick up 50 cents, $1, $2 when you could be risking $5, $10, $20 per share. So that's, again, why we want to have the option caller and protect our position. Now, unfortunately, we didn't have that cherry on top long call option that we had been putting on the previous weeks, which had been generating profits. But we still did walk away with the maximum potential gain in this trade. And so if we sell the 325 call option, all you really need to know in terms of what our goal is, after we go above 325, we've achieved the maximum return for that trade alert. And that's because, once again, we've agreed to sell our shares for 325. That's all it means when we sell or are short the 325 call. Now, on the other side of the trade, we were long the 320 put. That means most likely a large bank is willing to buy our shares of the SPY for $320, no matter what price the SPY has traveled to. That's our right for purchasing this put option. So let's say Trump had said, you know what, we just cannot stand for this Iranian aggression. We're going to go blow up 3 of their core oil facilities. Well, we'd probably be looking at a different outcome today. We'd be glad we bought that put option and be walking out with $320 a share as the SPY heads back to 300 in anticipation of an Iranian war in the Middle East. So that's the pros and cons of having the option caller. Provides that protection, but it does create a drag on our return. So keep in mind the returns our program has generated have had this layer of protection the entire time. So we have to be extremely accurate at predicting these markets in order to generate returns whatsoever. And primarily, we're trying to simply predict the US bond market, especially the long end of the bond market, and then we're trying to predict the S&P 500. Now, to do that, we also have to take a look at the health of the global economy, the major central banks, and by doing all this analysis, it can also give us a pretty good read on inflation or gold. So tomorrow will be our trade alert focusing on the bond market and the gold market, whereas today we will focus on the SPY. Now, normally we'd also be doing some pretty in-depth analysis on Japan, and I still pull up the charts and information I have normally pre-recorded for this segment, but today we'll be doing it live. Okay, so that's a review of our current closed trade. Now, I did have a member emailing in who wants to generate retirement income. And so he's wondering, if we're generating the profit on the underlying asset, then how does that turn into income he can spend? And so certainly that's true. You would have to, if we're creating the profit from the underlying asset appreciating, then you would have to sell 1 or 2 or 3 of those shares of the SPY to realize the profit and withdraw it. So in some cases, if we think the underlying asset is going to aggressively move up, we should expect to see the profit from the underlying asset. And if I do give you that cherry on top long call option, you can also be pulling some profits from that. If I believe the underlying asset's traveling flat, well, clearly the underlying asset's not going to deliver profits. So we would need to rely on selling a call option to generate profit and or purchasing a put option to generate profit if we think that asset's traveling lower. So currently we're betting down on the TLT, and that trade is paying off for us. The rest of the portfolio is currently positioned to benefit from an upward move. So there will be times where we generate profits from the underlying asset. There'll be times where we generate profits from the call options we're selling. And there'll be times where we are generating profits from our put options. So I'll do my best to clearly illustrate when and where we use each of these different trading strategies. The current trade is still bullish, a little less bullish than the Monday trade, just considering we've had such a huge move to the upside. We've sold the 327 call option. Hard to believe we're predicting that we could potentially hit 327 in the next 2 days. When we look back at the amazing rally that we've seen, but that is where I think we could go perhaps a little higher. Remember, Fridays when we get the update on the Fed's balance sheet, we're seeing a direct correlation to S&P 500 valuations and the increase in the Fed's balance sheet. Now, last Friday, they only increased the balance sheet by $10 billion. They had been averaging $25 billion. So we'll see if that does pop up larger coming this Friday. Now, for the first time in several weeks, we are seeing some repo issues being oversubscribed. So I would predict that Friday's print on the Fed's balance sheet will be very bullish in that they have dramatically expanded their balance sheet. So we'll see how that rolls out. Okay, so again, to review today's trade, we have sold the 327 call for a credit of 35 cents. All this means is we agreed to sell our shares of the SPY for 327 for a premium of 35 cents. So the person buying that call option really doesn't make money, at least at the expiration date, unless the SPY is not only above 327, it has to be above 327 plus the option premium he's paid us, which is 35 cents. So that speculator really needs quite a large move on the SPY ETF to generate a profit. Otherwise, we get to keep his money. Now, in this setup, we actually want the call option buyer to make money because we make money as he does. He really gets a big payday if it jumps over $2.35, whereas we make our big payday up to 327. After 327, we have no profit to be generated, but that's okay. From this short 48-hour period, I'm perfectly okay picking up a maximum profit of $197 a contract, or approximately $2 per share. Now, on the other side of the trade, maybe just people start taking profits. Who knows? The short-term volatility, the randomness of the markets, we're protected. So we've locked in all the profits up to 322 by purchasing that 322 put. Okay, so that's a good review of our last trade and our current trade, taking us into the next 48 hours. Let's go ahead and take a look at our open positions, and that will always be directly below. Gold had shot up, as Karen was mentioning in the opening of our webinar, to 1,600 last night. Now, I think there's a bit of a sell-off, but our long-term outlook for both gold and copper is extremely bullish. We like copper because of it looks like we're going to have a rebound in GDP growth worldwide from 3% last year to what the IMF is predicting as 3.3 going into 2020. And so copper's used for a lot of construction. So that's why we're long copper. Gold and copper typically go up in general together, but not at the same time. And so tomorrow we'll be looking at the gold copper ratio overlaid over the 10-year treasury. And you'll see it's a very interesting way to predict treasury rates. Anyways, no surprise that gold has sold off a little bit this morning. We still remain bullish on GDX. And if we do review, when we initially put this trade on 12/19, we had all the right elements. We had low interest rates. We had the Fed expanding its balance sheet. But we weren't seeing the price action in GDX that we wanted for quite some time, for several months actually. So we had purchased a in-the-money put of $1.15 at the $28 strike. Currently we're at $28.42. So we're just barely up $1 or just below $1. And we have 10 cents of value in our put. So we're just about break even on GDX. And I'll be willing to get more and more aggressive in this position as we continue to see the Fed increase its balance sheet. Very similar analysis on GDX relative to the SPY at this point in time. Emerging markets, we purchased the 450 put yesterday for 30 cents, and we're already up. And that's because our put has some value, and emerging markets has traveled slightly higher. So that trade just got put on yesterday, and is, at least when I took the snapshots of the current positions, was up 18 cents or $684 in a single day. Now the TLT is the most interesting position. We're betting down on the TLT, and this is a specific question for Gary Barber. So he came into the program several months ago and most likely bought the TLT at a much higher price. And if I pull up our track record, I'll pull that up in a little bit after we get through the document. We were essentially betting up on stocks and bonds from October, November, and December as we awaited to see the outcome of the US-China phase 1 trade deal. And essentially, we have three basic trading plans. If the US-China trade war is in a period of escalation, we bet down on stocks, up on gold and bonds. If we are in a period of the trade war is up in the air, we just don't know what the outcome is, flip a coin, then we're long stocks and bonds. And so that's exactly how we had our portfolio positioned in October, because we just had no confirmation from China until the very last split second that they were going to follow through with this phase 1 trade deal. Now, I would point out that we still don't have a trade deal signed. President Xi is going to have no part in signing it. No one's seen the documents that are in this trade deal. So really, it looks like we have a period of a truce. So we'll see exactly how this plays out. But even in a period of a truce, it's a major de-escalation from where we were in 2019. So that's why we are currently betting down on the TLT. So if we're betting down on the TLT and we own the asset, you got to ask yourself, how on earth do we make a profit? In fact, this was another question yesterday. So the strategy being put to use on the TLT currently is to own 100 shares of the TLT. And because you own 100 shares of the TLT, you now have the right to sell call options. So when the TLT last week was at, and I got to update this because we're no longer at 138.22. But last Thursday, when we entered this trade, let me pull up the trade alert. So here's the previous trade. We entered at 137.12. And literally that night, we had the Iranian, the whole chaos starting to unravel, which immediately shot the TLT up higher. And so let's just look at what we had put together in that trade. So we sold the January 10th, it's coming up in 2 days, 135 call option. And that was for a credit of $2.50. So what did that exactly mean? We're agreeing to sell our shares of the TLT for $135, but the TLT is worth $137.12. So why on earth would we do such a thing? Well, the only reason we would do that is because the call option buyer was willing to pay a premium of $2.50. So if we do add that together, from that point in time, now we got to remember, every Thursday, we're issuing a new set of trades surrounding the TLT. So we don't really care what you first paid for the TLT. What we're doing is we're generating a profit and loss on the TLT from every Thursday. So really what you want to do to track your performance on the TLT is to look at the profits and losses on all aspects of the TLT for the entire time you've been trading that asset. So you're going to really have 3 sets of data that you want to pay attention to. Number one is what's the overall change in price of the TLT. Okay, so that's one calculation. The second calculation is what's your profit loss on all the call options you've sold. And the third calculation is what's your profit loss on all the put options you've purchased. Okay, so only with that analysis will you really know what your profit loss is on the TLT. So in today's update, and specifically tomorrow, we will simply be analyzing the profit loss from last Thursday to this Thursday. And we have this analysis done every Thursday like clockwork. So that's all organized for you right here in the Thursday trade alerts. So once again, this is not password protected. It is posted after the market close, and it does have the profit loss, analyzing all 3 parts of the trade every Thursday. So if you do want to go back and look at the profit loss on each week, it's all right here, clearly spelt out for you. But let's go back to the current position so we can see how this is working out. And it actually turned into potential for some of you is what we call a double payday. Okay, so what's a double payday? Well, let's look at this once again. So the TLT was trading at 137.12. We sold the 135 call and collected $2.50. The very next day, a geopolitical event made the TLT spike higher. Many of our members were assigned. And so what's the outcome? Ignoring the put option, just ignoring that put option, what was the outcome? Well, we essentially made 37 cents profit per share because it was worth 137.12 when we entered into this trade alert, and we were assigned at 135. So we lost $2.12 on the underlying asset, but from the call option, you picked up $2.50. So it's a 38 cents gain. Now, what were you left over with? Well, you're left over with a put option. Now, put options go up in value as the asset goes lower. And so guess what's been happening ever since the Trump announcement this morning? Aha. Just as we had hoped, the TLT is tanking to 136.75. So let's look at what the value is on that TLT ticket right now. Wow. So now we're back to even on our put option. If this trend does continue into tomorrow, our put option is going to be showing a profit. So we made 38 cents from being assigned, and now we're at break even on the TLT. So that trade is working out just perfectly for us, and actually will outperform what the risk graph would have normally said we could have made. And that's because we got a double payday. We made a profit on the long side of the trade, and then it reversed to the downside. So some people also ask, well, if you're betting down on the TLT, why don't you just buy a put? That's one way to do it. It's far riskier. Our strategy actually can generate a profit if the TLT goes flat or down. So it's a much higher probability and allows us to safely generate profits on the TLT consistently. And again, my prediction on the TLT is, which was also, if you follow Jeffrey Gundlach, he did his very famous predictions yesterday. He does it once a year. Him and Stanley Druckenmiller have the same outlook that I do, and that's that the long end of the treasury curve is going to rise, which means TLT is going down until this becomes too much for the stock market. So we're looking for the TLT to sell off to around 120 before I think it's going to cause havoc for the stock market and force the Fed to start manipulating the bond market. Not the front end, which they are currently manipulating, but moving into the long end. So that's a lot of change of price for us to capture and turn into profits on our Thursday trade. And so far, it's looking like a very good setup for at least the next 3 to 6 months, maybe 9 months into 2020. Okay, so that's a review of our current trade. Here's our returns. I think we're going to be up quite a bit more than 0.1, but again, I took this this morning to get this all out. To review our trading plan, again, we are trading the SPY ETF Monday, Wednesday, Friday, emerging markets on Tuesday, and then the TLT and GDX on Thursday. Now, why that setup, why that organization? Well, first of all, if we can put our full thought process into a single asset class each day, you're going to make better decisions. So that's one reason. Two, why emerging markets? Well, for us to want to believe that the S&P 500 can keep going up, we need a recovery in China. Otherwise, it's going to be short-lived. Also, China, whether you like it or not, is most likely going to be the second most powerful country for the foreseeable future. So it does make sense to have some exposure. And I particularly think that the emerging markets ETF will greatly outperform the SPY in the next 6 to 12 months. So a lot of good reasons to follow emerging markets simply to understand what's going on in US markets, but also it could very likely outperform. Now, keep in mind, SPY's at all-time highs. It's already racked up huge gains. Emerging markets is selling at a huge discount. So from that perspective, there's just a lot of reasons to focus your time and attention on understanding emerging markets. Now, why the TLT and GDX together? Well, they're highly correlated because they both are very affected by inflation. So that's why I like to trade those two assets together because it really involves the same research and thought process. And if you're not studying the bond market, you really have no clue what's going to happen in the equities market. So by really focusing our attention on these three major asset classes, which is stocks, bonds, and then gold, which is really just an inflationary hedge, it can give us a great idea of what's going to happen in upcoming months and make it a little bit easier for us to predict the future and generate safe returns. Now, this is the asset allocation per $75,000. Most of our clients are trading at least $300,000, many trading 7 figures. So just multiply this. It's pretty easy. If you have 100 shares of SPY, you should have 200 shares of the other assets. If you have 500 shares of the SPY, you should have 1,000 shares of the other assets. Okay, so that's our trading plan. And again, we can make profit on each of these assets by owning it, no matter which direction they travel, by optimizing our option contracts. So we can control the risk, we can control the reward, and we can control the direction without having to ever sell our shares. Now, is there cases where we can get assigned? Certainly. And so most of you probably were assigned on the TLT, and that lucked out in your benefit this time, because now you're just long your put option. And if this trend continues into tomorrow, you will have made profit from being assigned on the TLT, plus you'll be making profit from your put option. Okay, so that, oh, sorry, Karen. So Karen didn't get assigned, but it's okay. You're making money on the call option, and you're making money on the put. So you'll be all right come tomorrow. Now, just to get a feel, did anybody else get assigned? Gary, were you assigned? Or you guys all have a chat box, so I'll open up for live dialogue in a minute. So you're probably about break even so far. Okay, now I'm gonna grab my trading platform and let's try to stream this to you guys so we can take a look at some charts. Anybody else assigned? Okay, so you're still holding your TLT. Mark's still holding his. A lot of people yesterday were telling me that they were assigned. Okay, now give me a moment. We're gonna switch over to sharing. I'm gonna close down some software here. Okay, audio check, visual check. I think we should be good. Okay, great. Okay, guys, we're going to look at some charts, some balance sheets of central banks, and then we'll go into Q&A. Okay, so normally my routine in the morning starts off by reading a handful of Bloomberg newsletters, which does a great job at recapping everything that's happened overnight and key events leading in. But the headline news today was this Trump speech, so I knew that all the news of the morning would be utterly worthless by the time that came out and dramatically change prices on different assets we're trading. Okay, the next thing I do like to read is the Yardeni research. And again, he does a macro review that focuses on central bank policy, among a lot of other analysis. Very good newsletter. So we'll skip through that today. Next thing I like to do is get into Twitter, where we can get breaking news at lightning speed and very summarized. And so once again, the whole world was on breath to see, holding their breath to see what the outcome would be from the attack last night in the Iraq U.S. air bases. Next thing we like to do is we have a schedule throughout the week where we focus on different countries and their balance sheets. And today's balance sheets we're checking on are Japan, which is clearly growing its balance sheet. And India, which is also growing its balance sheet. Okay. Next thing we review are the stock markets that we're studying.
Hey Jay, I think there's a technical difficulty. All we're seeing is a frozen image of the iPad. So,
Oh, really? Let me check.
yeah,
Okay, can you see now?
there you go. Yep, got it.
Oh, okay, cool. Okay, let me go back to the balance sheets. Okay, so here's a look at Japan's balance sheet, and they are gobbling up assets at record pace. So they've really weaponized their currency and turned it into a vehicle for purchasing assets. And they are the number one buyer of US Treasuries. And also they use their central bank to buy US securities. India, another very large economy, also growing its balance sheet. So again, this is important if we want to be bullish on equities, and especially with the narrative that we're going to see a world growth story this year. Okay, now we're looking at the charts. So we can see the US stock market is rallying very hard on the news this morning. If we look at Japan's stock market, it's also in a bullish trend. If we look at the Indian stock market, still in a bullish trend as well, going into 2020. Next thing I'm checking on to remain bullish in stocks. And again, we're trading the SPY. This is like a doctor's health check. Well, if we know that the biggest buyer of US equities is just these corporations buying back their own stocks, we want to make sure that their ability to continue borrowing remains. And so there's 3 ETFs to track that really tell you the health of the corporate bond market. And that is AGG, by far the largest assets under management. And really all you need to know is the higher this ETF travels, the cheaper it is for corporations to borrow via selling bonds and buy back their own stock. And in fact, Microsoft has negative yielding bonds in Europe. That means they're getting paid to borrow money and turn around and buy back their own stock. So you tell me, how are stocks going to crash when they can borrow for free? And not even for free, they can make money borrowing money. It's absolutely ludicrous.
Yeah, and Jason, great point. And so many retail investors just are clueless to really how the financial system operates. So truly appreciate you touching on that. It's just so incredibly important.
Yeah, it's going to be very tough to have much of a stock crash without these corporate markets having some trouble. Here's LQD. This one really targets the top end of the S&P 500. So your Microsoft and Apple, which represent 20% of the total gain in the S&P 500 last year. Just 2 companies. Well, if LQD is trading at all-time highs, they're borrowing at the lowest cost they've ever borrowed at. Just incredible. Okay, so maybe the junk bond market might be showing some sort of signs of weakness, and this is better correlated to the Russell 2000. Even the junk bond ETF is still in a strong uptrend. So there's just absolutely zero weakness that we can identify in today's analysis. We have 2 major central banks tracking, Japan and India, growing their balance sheets. Their stock markets are rallying. US debt products are at all-time highs. Let's go ahead and just look at a comparison. And remember, each day of the week, we're tracking different countries and different analysis so that through the course of a week, we've really done our due diligence to make the right decisions to continue our thesis going into 2020. Okay, we can see how other markets are performing here. Japan and India underperforming the S&P 500. Now, interestingly enough, there's really just one stock market so far outperforming. And I'll pull that up just, even though that's usually our Monday analysis. And it's the Brazilian market is the only stock market currently outperforming the US. So all cylinders are firing. We also had a very strong ADP report today, which is just the job rolls, and it beat expectations by 50,000. So that's really the core of our analysis for making a decision on the SPY today. Let me go ahead and go back to my desktop. Okay, guys, let's go ahead and open this up for Q&A. Let me see what questions we have in the chat. Yeah, I gotta love this iPad. It's just so powerful. All right, guys, and go ahead and go to Q&A now. So that's an analysis of our position. Tomorrow we'll be trading the TLT and GDX. But yeah, let me go ahead and unmute everyone and see what questions we have out there. Now, I don't want to get too much audio, so if you do want to speak out loud, please hit the raise your hand button or use the chat box and I can unmute your microphone specifically. And that way we don't have a lot of audio. Okay, Gary, good. All right, Gary, thanks for joining us today. Your microphone looks like it's muted. So I think you have to hit the mic button and then you'll be good to go.
Yeah, and Gary, if you scroll down to the bottom of your screen, the very bottom.
As you know, I'm technically challenged. I think I found it.
Nice. Hey, good to hear from you in person.
Yeah, same here, Jason. First, I want to thank you for, your rapid response back to me. You guys are great. I am truly the poster child for these financial wizards. And I'm really grateful for the fact that you give us small guys some attention. I still do not understand how in the world you can get a profit without a sale. Let's take today's example on SPY. The profit that you report to us has several components. It has the collar price open, the collar price close, and the movement of the underlying. Is that right?
So you're correct. To create if you wanted to withdraw profit from this trade, you would have to sell.
Okay.
You'd have to sell 9 shares.
9 shares.
Yeah, and there's other ways you can use this as income, folks. You can adjust on basically on a monthly basis, on a quarterly basis, biannual basis, or annual basis, if you want to go ahead and use it for income. So that's something I know. I've talked to a few people that are utilizing this for income specifically, and that's some strategies that they have been utilizing. So. And I really think either quarterly and annual has been the most popular, but that's certainly a way you can pull the income out of it.
So, but yeah, so I do understand your question, Gary. So, yeah, in this example right here, we generated a profit of, and this is based on trading 19, a much larger block of shares than some people watching this. So this is based on 1,900 shares, but the profit generated in this case was not from the options.
Right.
Okay. So we lost money on the options. We made money on the underlying.
That's right.
But from your point of view, whether you get paid by credit card, check, or money order, do you really care?
No, as long as I get paid.
Right. Yeah. So if you had a business, do you care if they pay in cash? Do you care if they pay with $5 bills or $20 bills? Probably not.
No, but I don't consider it paid if I have like an accounts receivable, which is sort of what this is. It's an accounts receivable. Yeah, it would be a profit if I sold it.
Correct. So you'd have to, for this example right here, you'd have to sell that profit. So in my case, let's say I needed to take the profit out of my account on this specific trade, I would go sell 9 shares of the SPY.
So 9 shares to arrive at the 2660.
Approximately, you know.
Yeah.
But I wouldn't be worse off than where I was 2 days ago, because 2 days ago my account wasn't worth this much.
Yeah, I understand that. That one thing I was going to ask you is, I just want to confirm, is it, let's see, how's the best way to put this? Is it required or is it necessary for me to get the trade in at a particular time? Like, do I need to get somewhere close to the same price as you get? Or does it matter if I get them at 3 o'clock in the afternoon?
Well, in general, if you want to get the only time it makes a big difference is if the SPY has changed its value dramatically from the point I've made the trade to the point you've made the trade. But in general, it just doesn't move that fast. So you're going to get a very close result to what I am. Now, if you make a little extra because you waited, most likely you'll make a little less on the next trade.
Right, I understand
and vice
that.
versa.
Just like the call option will be a little more or less than yours. I may benefit sometimes, it may get hurt sometimes. I understand that.
But yeah, in general, you know, we're trading these assets very frequently, and they're not you know, small cap ETFs. These are the most highly traded, most liquid products that exist. So they just don't usually change price in out. You know, if I had done the trade alert, that's why I kept you guys all waiting for quite a while this morning. Is I knew if Trump, no matter what he said, I knew the price was going to change quickly.
Right.
Because that's a big piece of news. And so very rarely can we see moves like we did this morning that are to that size. Okay, now Oscar has a neat comment. This week has been an example of what, I love it. Oscar's ready for some volatility, just like I am. Here, Oscar, I'm going to go ahead and unmute you. Or you got construction going on? If anybody wants to talk out loud, please raise your hand. Here's what Oscar wrote in the chat. This week has been an example of what we can expect this year, in that volatility will be increasing due to geopolitical as well as other events domestic. Given that you trade 3 times a week on the SPY and weekly on others, do you feel that the effect is minimized? Yeah, I think trading 3 times a week on the SPY gives us the benefit of being able to chase the SPY with our put option. Is really the key here, because the longer, the more time that has elapsed after each trade alert, the greater risk that we've generated a profit, and we want to lock in that profit. So we lock in profits by moving our put option up, and we're financing that by selling the call. So definitely some huge advantages in trading the SPY so frequently. Now, like Oscar also pointed out yesterday, when the market's going up, we'll do our best to keep up with it and continue to have absolute protection. But when the market's going lower, that's when investors in this program are going to look like knights in shining armor and will be dramatically outperforming all of their peers. So certainly. Now, if you listen to, and I tried to record it, guys, for our boot camps, some reason the audio didn't. I'll give you my password to access it. Jeffrey Gunlick did his piece yesterday, where it's called Just Markets. He does this every 3 to 4 months, but really lays out his big predictions for the year. And he's very good at predicting presidential elections. And so now he's thinking, The new big risk for 2020 could very well be Bernie Sanders as the Democratic nominee. And that would be potentially devastating for stocks and bonds. And and you know what? Bernie's holding in there. So that was probably the biggest take from his webcast. That was anything. And there had been a lot of polls showing his strength going into the last month. But that's a big risk that we need to be aware of going into 2020 elections. And there's a lot of other ones, but that was certainly interesting. I can already hear Karen getting upset about Bernie over there. Just kidding, Karen. Oh, we got quite a few people live here. Anybody else want to talk? Say hello. Let us know how you're doing with the program so far. Let's see how that TLT's. Oh, I did turn off the trading platform just to make sure this broadcasted smoothly. So yeah, Gary, I really glad you made it on the webinar. My goal in this program is to deliver safe profits. And I don't care if we get paid with a money order, a credit card, cash. You know, they pay us. We want to just do it safely. And so, you know, a lot of people just want to own the SPY, sell the call option, and not worry about what the SPY is going to do. And that worked out great, you know, for the last 11 years. But the thing is, we don't want to pick up 25, 50 cents and risk something like 5, 10, 20 bucks. It's just not a good idea. So when you realize how leveraged the market is, what people don't realize, what a lot of these hedge funds do is they go and they look at some loan to a small cap company that's been made by a bank, and the hedge fund comes in there and says, hey, you know, this was a bad loan to this bank, from this bank to the small company. We've looked at their financials. We know that they're going to probably go bankrupt. So we're going to go ahead and go to the same people who loan that money and say, hey, we want to put a bet on this 10 times the size. And then they'll go deal with an insurance company that's insuring the bank on that loan. Then they take the option that they've created, the derivative, and they'll go use that as collateral to get their own loan, and then they'll go buy stocks. And so when you realize that there's this circle jerk going on that takes just $1 loan and turns it into $100 of derivative risk, and then that continues and continues for 10 years, then you start to realize why our interest rates are so low, why the Fed's having to grow their balance sheet at the fastest pace in history, and that this stock market, although I am betting up on it, I understand that it could easily puke out 5, 10, 15% in a very short period of time. So that's why we trade the way we trade. And most of the time you look like you're giving up profits and you're a fool until you don't. And so we could go through our track record and look at the put options, and you'll see most of the time our puts lose 90 to 100% of their value. But a handful of times last year, they had 1,000% return. So those puts can pay off for you. Oh man, that's funny. Yeah. You know what's funny, Oscar, is I was going back to Trump running for, you know, just to become the nominee for the Republican Party, and listening to him go after Mark Rubio. Oh my gosh, it was comical. So I could only imagine what sort of insults he'd be throwing at Bernie or anyone else. It's going to be a scene no matter what. That's for sure. Here's to Bernie keeling over after nomination. Trump's insults will send the socialists into cardiac arrest. It will be fun to watch. It will. It certainly will.
So Oscar, thanks for the comment too. Oscar V just sent this in, folks, and I figured it'd be pertinent to read it out here. It says, this week has been an example of what we can expect this year and that volatility will be increasing due to geopolitical as well as other events domestic. Okay. Given that you trade 3 times a week on SPY and weekly on others, do you feel that the effect is minimized? So he's kind of asking, commenting out to the crowd here. So
Yeah,
intense
absolutely.
investor.
Huge advantage for us to trade the SPY. It basically lets us just track the SPY, float our put option, and finance the put for free by selling call options. So this allows us to lock in all these profits. Everybody else who's just buying and holding equities, they could give up a lot of their gains in a very short notice because they're just writing it naked and they think everything is just groovy and there's no risk. And they're really just clueless at just how leveraged this entire financial system is. And so that's, I want to point out our track record is 14.8% 2019. But how did we get there? Did we just buy some stocks, hold on to it like a cowboy riding a bull? No. We did it with a very diversified portfolio, and we did it with a huge drag, which was our insurance or protection. So that's how you get 14% return with only a maximum loss in a month of 1%. Yeah, and when it's going down, so my expectation for 2020 is a rapid rise in equities until we get a massive crash because of yields getting too attractive. And that will give you ammunition for the Fed to cut rates into 2021 and also give us the cover to re-escalate trade war with China. And that's when I think full-blown QE begins and you get your massive gold rally. So who knows where the S&P 500 ends up at the end of 2020. I do suspect we get a nice rally for the next 3 to 6 months until these treasury rates get just too attractive. And so definitely tune in tomorrow, guys. I think where most people lack education is understanding how the bond market and the US deficit, the government spending, is really fueling the stock market rally and will eventually be what causes it to crash at some point in 2020. And we have some pretty good indicators to know just how far the TLT can go before it will cause havoc. And again, we make money in both directions by optimizing our options. And so there's a good possibility the TLT will sell off at a much faster rate than the SPY appreciates in the next few months. So I know a lot of you guys have been painfully holding the TLT as our insurance against the China trade war for the last few months, and it's been a slow bleed. But now that that risk is hopefully off the table, we'll have more confirmation on the 15th when this US-China phase 1 trade deal is signed. But we can actually make more money on that Thursday TLT trade, possibly than the SPY. And that would just be because the TLT changes price at a faster pace than the SPY goes up. All right, guys. Well, this was a great webinar. I'm going to go ahead and see if we have any last questions, and then we'll wrap this up. MH says, have you tracked the profits just playing? The profits on the options are negative because we're using those as insurance. Now, we've had a few times when we've only bet down a handful of times in 2019. We've made some good profits betting down on the SPY a couple times. And we made, I think two good trades on the TLT betting down. And this will be the third. So yeah, not always will the options be geared towards generating profit. They'll be geared towards protecting our assets. Oh boy, that's a vicious little guy you got there, Gary. Just kidding.
All right, guys, and this is Dean. I'm just going to announce my phone number one more time. Please be sure to call me for your free investment consultation and also to get a hold of the deal of the day. My number is 505-322-7515, and I have to jump on a call with a client here for a coaching consultation. So want to just thank you all for your time. Appreciate you coming in, and please continue to ask questions to Jason to get the most value out of your time today. Thank you, folks.
Okay. Thank you, everybody. I really appreciate it. And see you tomorrow. We'll be covering bonds and gold. So thank you so much.